This review for the WISE test will focus on the content area of banking. The term banking is actually used to refer to just a set of financial services offered by banks and credit unions. You have deposits that you can make, whether they be checking accounts or savings accounts and certificates of deposit. Now, some of these accounts will actually pay interest. And this is what banks will do. Then they'll take that money that you've deposited and turn around and loan it out, whether it be for cars, homes, or just through credit cards or other types of loans. On these loans, they will collect interest. Now, the goal of that financial institution is to collect more interest than they pay out. One of the main types of financial institutions you might run across is a bank. Now, a bank is designed to serve both individuals and businesses. These folks are referred to as their customers. Banks are for-profit institutions trying to earn money not only for themselves but for their shareholders. They do this by charging interest to the folks they loan the money out to, and obviously you want to make that less than what they're paying out to the folks putting money in. One of the things they do offer is a whole lot of branches out there that a customer can go to. Credit unions operate a little differently. They provide those same financial services as banks, but they focus primarily on individuals. Specifically, they'll pick individuals with a specific characteristic. For example, Apple Federal does educators, students at schools that have student-run branches of Apple Federal, as well as now they're doing the Winchester Medical Center. Credit unions have members who are part owners. They're not just customers. And they're not-for-profit organizations. And as a result, they will pay higher interest on deposits and charge you lower interest on loans. With any financial institution, your deposits are insured. With banks, the Federal Deposit Insurance Corporation insures it, and with credit unions, it's the National Credit Union Administration, and both insure for $250,000 worth of deposits. When you have a check that you want to deposit, you have to endorse it. There's two different kinds of endorsements. One just involves a simple signature, and that's referred to as a blank endorsement. Now, anybody can take this check and deposit it wherever if they have it in their possession. The other one's called a restrictive endorsement, and here you will restrict what can be done with the check, and in this case, it can only be deposited at that bank into that account number. On checks, there are certain things that need to be on there. Normally, pre-printed on a check that you would write yourself, will be your account owner information, as well as the check number and the bank's information. Then you have to fill out who the bank has to pay. You have to put the date that this check was written, and you also have to put the amount that needs to be paid, not only in numbers, but in words. And then it also needs to be signed. Of course, some checks can actually have all this get printed on it, but these are the basic requirements for any check. Of course, these days, folks are going electronic, so you can use things like an ATM card. Now, with an ATM card, it's only used at ATM machines. You go to the ATM machine, you can access your savings or checking account, you enter your PIN number. The big thing is here, you cannot make in-store purchases with this. For that, you need some kind of debit card, whether it be just a straight debit card or what's called a check card, which is associated with some credit card company. These will all be linked to your checking account, and money is going to come directly out of them. You can make purchases in store, or you can make purchases online, as well as using these at ATM machines to get money out. Here, you'll either enter your PIN number, or you'll have to sign for the purchase, depending on how you have the transaction processed. Overdrafts is when you try to make a transaction, whether it's be an electronic purchase or write a check, and you are doing that for more than what is actually in your account. Now, overdraft protection, the bank will then cover that so that you now have that same amount that is due, and as a result, you're going to have to pay some kind of finance charge or interest on that temporary loan. Another feature common with banking now is online banking. With online banking, you could log on and you can see what's going on with your account. You can check balances, you can transfer money, you can check your transactions to make sure all the transactions that are listed that are affecting your account are ones you actually did. You can also set up bill payments. You can schedule payments for bills, both the date and the amount. And you even have now mobile banking, where you can do all those same things. Check your balances, uh, review your transactions, you can pay bills, and what's also nice is you can even deposit checks just by simply taking a picture of the front and back of the check and depositing it straight from your phone. Direct deposit's a very nice thing to have with your paycheck. This means instead of you getting handed a paper check that you now have to go deposit somewhere, the money gets electronically transferred automatically from your employer into your account. You don't have to wait in line. The money's there. It's usually available at least one day prior to the actual payday, so it's very convenient to have that money show up early. One of the things you do have to be concerned about is identity theft. It's very common. That's why it's so important to check what's going on with your account. Make sure nobody has actually gotten a hold of your account information and started making purchases out of your account, or worse, have set up themselves as you and now are using your social security number and opening up accounts, whether they be checking accounts or credit cards, and running up those balances, never paying them, or bouncing balances, overdrafts, and it will then come back to haunt you. Now, when you're shopping for a bank or credit union, several things you want to look for. First, do they offer the types of accounts that you're looking for? Uh, do they have any minimum balances? Some will charge a fee if you drop below a minimum balance. You also want to see what kind of other fees they might have. Do they charge a fee just for simply having that account or anything along those lines? Also want to see what products do they offer, meaning do they have credit cards you might want, loans for cars or whatever. Also want to see if it's important to you what their locations are and what their hours of operation are. So if it's convenient for you, you want a financial institution that is where you want, when you want it. Also look at their interest rates to see not only what they're going to pay you on the money you put in, but what they're going to charge you on the money you need to borrow. If ATMs are important to you, where are their locations, how many are there, what kind of fees do they charge, as well as what the availability is of online and mobile banking. That concludes this review.